Mr. Lu, the inflation went down, but how come the stock market crashed? Should I quickly get out or not? It's a crazy market right now, man. Well, ladies and gentlemen, today we have a very good news and a very bad news. So I think it's important that we look at it and find out why. So in a nutshell, today we have got the inflation coming down significantly, but the S&P 500 and Nasdaq went down significantly. First, we need to understand what happened to the inflation. And second, what happened to the stock market? And then we take a view whether collectively this is a short-term thing, a long-term thing, or it's a very drastic stock market shift. Let's watch on, shall we? As usual, these are my disclaimers. And let's go on. So the first thing is we must celebrate that there is a very, very good inflation news. In fact, the inflation has been coming down so significantly that the US is now in a month-to-month deflation. What do I mean by that? Right now, the CPI has been coming down and down and down and down. And previously, it was 0%. That means flat. And now the consensus view is that the inflation will come down 0.1%, which means it's a still slight month-on-month increase in prices, but the actuals turn out to be a negative CPI, meaning that prices are coming down. And in economics, we call this deflationary. This is a very, very significant news to know that prices are starting to come down, not just the prices are slowing down in their price increase. So prices are starting to come down. Collectively, this is a very, very good news. Well, not only does the headline inflation has gone down, the core inflation, which the Federal Reserve look at a lot, has also gone down significantly. So the previous core inflation rate was 0.2%, and the consensus view by all the analysts was also 0.2% for the month of June. Well, it turned out to be 0.1%. So if you analyze 0.1%, it means that it's probably less than 2% for the whole year. So actually, core inflation has come down to where it is supposed to be. And that is a very good news. So across the board in the month of June, we see several very significant negatives in the prices. And that's very, very, very important for us because that means prices are actually starting to go down. The one that is ultra sticky throughout the whole year, in fact, throughout the whole 2 years, is this thing called shelter. Shelter is housing, right? It's rentals. And for the first time, we start to see it coming down as well. So the long-awaited lag effect of shelter is finally materializing. And that's a very good thing. Collectively, all good news, almost no bad news from the point of inflation. The whole Wall Street now is expecting the Federal Reserve to cut the interest rates in September. This is something that we are waiting for a very, very long time, right? Given that the prices have all come down, the core inflation rate is coming down, so housing is coming down, service inflation is more or less coming down. So across the board, all are coming down. So it is a very strong resounding evidence for Jerome Powell and his Federal Reserve Board to feel very comfortable that they should start commencing the cut in interest rate. Well, interestingly, the Federal Reserve Chairman, Jerome Powell, in a testimony to the Senate, actually told the US lawmakers that right now, they are equally worried about inflation and also equally worried about a possible slowdown in economy that will hurt the economy. So remember, they have a dual mandate, price stability and economic growth as well. So right now, they have come to somewhat a balance, which basically means it's a strong signal they have to cut interest rates soon. So I think that's all good news. They want good data. They say they've been waiting for good data, and now they have good data. And most likely for the next month, it's going to be a good data again, right? So in September, when the Federal Reserve Open Market Committee meets, most likely, if this trend continues, they're going to cut interest rates. So the question is no longer just about cutting interest rates. I think that is more or less concluded as a done deal for September. But right now, they're also thinking about, how much to cut, right? Most of the analysts predicts a 0.25% cut. And if the market slowdown continues significantly, then they may even cut 0.5%. So across the board, we are all looking at right now a Federal Reserve cutting the interest rate in September. And that's a very good news for not just the stock market, also good news for bonds, also good news for housing as well. The CME FedWatch, which is a website that monitors prediction about interest rates, now expects close to 93% rate cut of at least one time by September. So this should mean that the whole stock market is going to be very exciting moving forward, because all the tech stock, they are very dependent on interest rates, very sensitive to interest rate, should actually have a positive reaction to the stock market. So unfortunately, the stock market has the opposite reaction to this very good news, and this sends everybody questioning why. Not only did the stock market not react positively, they reacted severely negatively. The S&P 500 went down by 0.8%, not that bad, but the Nasdaq went down by 2%, right? And that's a very significant fall. It is something very concerning. Everybody is wondering, why is this happening when such a good news has happened? I've always said that an interest rate cut will send the stock market rocketing, but the whole stock market reacted negatively to a possible rate cut. Well, if you really deep dive about it, it's really about profit taking and rebalancing. And let's take a look at the details. So in the same day that the Nasdaq and S&P 500 went down, very interestingly, the Russell 2000, which is make our small cap stock, and the Dow Jones Industrial Average, which is make our traditional value stocks, actually went up. So the Russell 2000 went up so much that this is the highest increase ever in a one day for this year. So that's really a very strong sign that funds are moving from high tech to small cap. It's a very common thing. They made enough money in high tech. Right now, they see that the small cap are lagging behind. They transfer the funds from here to here. And this is partly profit taking. We also call this rotation. I'd like to call this rebalancing as well. As money goes from one side to the other, so you have got more balance depending on the terminology. But really, it is about rotation of funds from one side to the other, and that's not too bad, right? That's not too bad. If the environment was everything go down, then that's a different story. But this is clear until cannot clear a sign of rotation. So they rotate from highly profitable, in some sense, overvalued tech stock to now small cap stock. And that's fine. That's absolutely fine. So you look at all the analysts, they're actually saying the same thing, right? They're saying that the investors are shifting from the underlying equities away from artificial intelligence names. Stock rotation hit mega cap on bets that Fed will cut, right? So that's another sign that analysts have responded. And the other one is optimism over low rates has sparked a shift from riskier corners of the market. Money exited from the long favored safety trade of high tech. Now remember, the mega cap stock, which is the Magnificent Seven, are highly profitable, lots of cash. In fact, high interest rates actually favor them because their cash earns a lot of money. And right now, with the cut of interest rate, not necessarily favor these 7 magnificent stocks. It should be generally good for the whole stock market, but this shift, okay, I think it's a temporary problem, but at least it explains why this phenomenon is happening, as we see yesterday night. Interestingly, as a sign of rebalancing, the bonds also went up, right? The bond yields went down, the bond prices go up. And right now, the TLT is going up significantly as well by 1%. 1% for bonds is quite a strong climb. This is also a strong sign of rebalancing as well. So generally, high-tech stock value went down, money flow from a high-tech stock to small cap stock and bonds, right? So it's just rebalancing and rotation, not that bad, not that bad. So in my humble opinion, I think this phenomena is okay. We have seen this many times before. People buy on bad news and sell on good news. This is quite a common thing. Looking forward, I do think that this phenomena is going to be short term. I don't think it's going to be that long. Probably a matter of days or maybe a few weeks. The whole stock market will start to climb back again. And retracements are very common for stock market to go up and down, up and down, up and down. I think it's okay, barring any black swan event that is happening. I think this phenomenon is absolutely okay. In the foreseeable future, I think inflation is going to come down. Therefore, interest rate will come down. So this is all good news. So let's look forward to it. There is one thing I need to caution everybody, is that as the inflation comes down, interest rate will likely come down. And as a result, the hot money will flow, okay, from US dollar out of US dollar. So US dollar to Sing dollar will start to weaken, and we are already seeing that. The US dollar has weakened by 0.5%, and I've seen my portfolio fall accordingly as well. And that's something we need to be cognizant about. This trend is likely going to continue. So whatever gains you have made in your portfolio will likely to weaken because of a fall in US dollar. And over time, they will reach some stability. So the next period is a period of rise and fall, rise and fall, rise and fall, with some complication on the exchange rate. So we need to be cognizant that it's a period of volatility that's coming as well. In conclusion, I think that we should all celebrate that the inflation is coming down, and this period of hardship over high interest rate is going to be a chapter of the past. This should also set the lessons for us to know what is to come whenever there's an inflationary environment. And we look forward to more rate cuts that are coming, and I'll see you in a day or two. Bye bye.